good morning, everybody. I'm hustling and bustling. Got a little bit different setup today. My sweetie got a virtual interview that she doing, so I gave her my normal green screen and I put up the sheet in the background. I actually kind of like this setup a little bit better. It ain't right there. It ain't look like the thing is way back there now. So I got plenty of room. Feel like I got plenty of room. Spidey still hanging out. Y'all see Spidey in the building. Uh let's get into it, man. Good morning, everybody. I, I'd like to welcome y'all to the overnight price action for October the 4th, 2022. Hey, if this your first time joining us here at Tim's Tidbit, like I say, Spidey over there hanging out already, I like to say welcome. If this not your first time pulling up and you always pull up every day and you always supporting every day, y'all see I got on my sweatshirt. It's cold in Columbus, Georgia, man. I like to say welcome and thank you very much. All of the faithful few that pull up every single day to talk about the price action. If you don't know who I am, my name is Timothy Lee Rogerson. I get on Al Gore's internet every single day, talk about the price action relating to the ES, the SPY, the SPX, anything dealing with the SP500. That's what we talk about. I do it just to show people what a full-time trader would do in any trading scenario, any situation, any market condition. Just talk about the price action. I didn't invent this stuff. I learned the stuff that I trade every day from ICT. You go to ICT YouTube channel and learn everything that I know when it comes to reading price action for the free 99, just like I come here and I share my thoughts every day for the free 99. Why do I do it? Because I want people like you and like me to learn this stuff and understand this stuff and execute on this stuff. It makes no sense to come on here every day with me and figure out how I read the price action if you don't execute. Execute. Learn it, execute, learn it, execute, learn it, execute, learn it. Hey. Hey, man, only thing I ask you to do is hit the like button. Please hit the like button because I'm not on any other social media anymore. So I can't tell people to come get this free information. So the only way they're going to see it is if you hit the like button or if you share it. If you want to share it, I appreciate that. But I just ask that you hit the like button because I've been told that the YouTube algorithm like when people hit the like button and it shows it to other people. So we can help spread the word about this free information. Yeah, man. The link is in the chat. The link is in the chat for anybody who want to pull up. Give me a second and let me go pin that comment. I got to log into my YouTube channel to pin that comment. So hold on just a second. Videos. Oh, I got to go to my channel. Your channel. Videos. Pin comment. All right. The comment has been pinned to the top of the chat. The comment is pinned to the, let me like it myself. Y'all get the likes up for me. I see more people than I see likes. Y'all hit the like so the YouTube algorithm will show this to other cousins. You hear me? All right. Now that we got that done, let's this cold weather got my allergies draining and I ain't got no tissue back here. And my sweetie can't bring me no tissue because she in the middle of an interview. Y'all excuse me 1 second. I'll be right back. Sorry about that, y'all. Sorry about that. My allergies draining. This cold weather got my allergies draining. I ain't want to be all on here wiping snot on my sleeve. All right, let's see who up in here. We got Aloysius Mama up in here. What's going on, Mama Aloysius? What's up? Here to learn and share. Good morning to you. The birds are chirping. What's up? What's up, Mendez? Hello, Anna. Hello, Elsa. Hello, Queen. How are you today? What's up, Mendez? What's going on, Otis? What's up, Seawalk? Big B in the building. What's going on? Callio. Callio. What's happening, Callio? Kareem, what's going on? Cool it now. Watch out. The hater is in the building. The homie Zay up in the building. What's happening? Angela up in the building. What's going on? The other Kareem in the building. Michelle Tucker. What's going on? Michelle Tucker. What's going on, Thomas? How you feeling? Hey, how you doing? I'm glad that you got through. What's going on this morning, man? Hey, what's going on, Cameron? What's going on, Cameron? With the cutie on your shoulder. I see more numbers than I see names, but that's all we're gonna shout out because that's all in there right now. Again, the link is pinned at the top of the chat. If anybody want to pull up and ask a question, anybody that's new here, they don't understand what the link is for. The link is if you want to pull up and ask a question, you can pull up and just talk with your camera off. You can pull up and talk with your camera on. You can also share your screen if you're on a computer and you're using Google Chrome. Anything you want to do, the link is in the chat. We here as a community, we here as a family, and we trying to figure out how to get to this money. Around here, we don't care about being right. We don't care about being wrong. Only thing we care about is making money and reducing the amount of money that we lose. You hear me? Come on, let's get into it. Oh, some more people popped in. What's going on, Lil Hawk? What's going on, Sanjay? What's going on, the Cool Bro 79? Hey, have I ever seen her name before? I don't know. You know what I'm saying? My son say 50 hit me like a truck. If this your first time pulling up, welcome. If it's not your first time pulling up, I jalapies. I just don't remember seeing the name. What's going on, the Cool Bro 79? I'm the Cool Bro from 72. You hear me? Let's get into it, man. Looking at overnight price action, as you see, as you can tell, or if you do not know, if you do not remember, this was what we said yesterday. I think it was. I was like, the obvious target for the price delivery was at these highs over here at 37.51.25. As you see, we made it there overnight. The algos continue to reprice up to that level, right? And if you don't know why, I said that was the most likely target for the price delivery. Going back for just a second, you know what I'm gonna do? I just had an idea. This what I'm gonna do this morning. This morning, what I'm gonna do is, instead of just talking about what price did overnight, I'm gonna talk about what I look at, I guess, in a sense of how I actually read the price action and the things that I look for. Wow, we're gonna make it a teachable moment. We're making it a teachable moment today. Okay, so let's go back. Right, this right here was our, when I say this right here, I'm gonna put a line there. This 37.51.25. We said yesterday that, hey, this is the likely target because yesterday we closed at 37.69.75. We got as high as 37.11.50, and we closed at 36.91.75. Is that what I said the first time? I don't think I said that the first time. Anyway, we closed at 36.91.75, right? And I said, looking at how price is trading, we took out the external buy side liquidity that was resting below 36.13.50, right? I'm gonna put a line here because I'm going back for people who wasn't here or don't understand what I'm saying. So we're gonna make this line red, the bottom that used to be the bottom of our box, right? We're gonna make it red, we're gonna make it fat to make it stand out. That used to be the bottom of our box, right? This line right here, what we're gonna make this purple because this was the top, well, dark blue or whatever color I be using. I think it'd be dark blue, and we're gonna make it fat. This was the top of our weekly box, right? For those who remember, right? The top of our daily box was at the top of here, I think. Yes, it was here. It was there. That was the top of our daily box, right? So I'm just gonna put another line there and I'm gonna make that green, right? Because that's our daily box level, right? So now we got everything back in place, like where we were yesterday. Where's my lime green? Why is my lime green not up there at the top? There it is. All right. So, okay. So this was our daily box from yesterday, right? Well, from Friday, yesterday, whatever. We took out the sell side liquidity that was resting below this 36,1350, right? When we took out, so we took out external liquidity, right? And for anybody who don't understand what external liquidity is any buy stops, any sell stops, buy stops, fair value gaps, breakers, order blocks, anything where liquidity lies that's outside the dealing range that you're looking at, right? So our daily dealing range was in between this green line and this red line. That was our daily dealing range, right? So we took out the external sell side liquidity outside the dealing range, right? Once we took out the external sell side, right, we had a new bottom of the box. Boom, that's the new bottom of the box, right? So once we took out this external sales side, now we got a new bottom of the box. The path of least resistance is to take out internal liquidity, right? The path of least resistance for the algorithms is to take out internal liquidity of the dealing range that the algos are watching at that period, right? It's a nice situation to be in tune with the algos where your dealing range and their dealing range is the same. How do you know their dealing range? You never do. You just have to anticipate, okay, based off how we traded, this is the dealing range I'm going to watch. And then you just, you know what I'm saying? If you end up lining up with the algos, boom, 9 times out of 10, you're going to be on the right side of the trade, right? So this is our dealing range. The path of least resistance is in the dealing range of internal liquidity. It's called internal liquidity because it's inside the dealing range. Lil Timmy Rogers just like to put it in a box because it makes sense to be in a box. The price comes and it falls into the box like a ping pong ball, and when it get inside the box, it just bing, 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 bing. It just bounce around inside that box, soaking up all the liquidity, and then it either pops out the box to the top, or it pops out the box to the bottom. You know what I'm saying? Once it soak up all that liquidity. So the path of least resistance is inside the box, right? So now, as you see, we when we took out this external sell side below the low that was at 37.16, whatever we said it was, right? We started to proceed back up. Whenever you, hey, wait a minute. Am I looking real slow to y'all? Am I looking like super slow to y'all? Hey, was I looking crazy? Like I looked over there at myself and I was looking like crazy slow. Did I look like super slow to y'all? Are we good? Somebody put it in the chat if we good. Somebody put it in the chat if we good. Are we good? I don't want to be running my mouth. Like I was like when I looked over there, I was like, that's how I was looking. Do I just sound normal to y'all? It's good. Okay. Okay, all right. I just wanted to make sure I wasn't getting no errors, but when I looked at the screen, I was looking crazy. Okay, all right, back to what I was saying. After we took out the sell side liquidity, now to the external sell side, now the market is going to move toward soaking up internal liquidity, right? Where is internal liquidity found? Y'all know how we go in and we mark out like these lines here that say sell side liquidity, sell side liquidity, sell side liquidity, buy side liquidity. It's like it fair value gaps, breakers, order blocks, all of the what ICT call them PD arrays, all of the PD arrays. That's what he called them, PD arrays, like your fair value gaps, your order blocks, your breakers, your swing highs, your swing lows, everywhere that liquidity rests, right? The algorithms are going to go back to either rebalance or attack that liquidity, right? The algorithm, they rebalance fair value gaps, right? They rebalance fair value gaps. They attack swing highs and swing lows. And when I say attack, I mean like they raid these stops, because the buy stops and the sell stops are sitting above and below lows. Buy stops are above highs, sell stops are below lows, right? So as you see, yesterday we came after we took out the sell side liquidity, we consolidated here, and then we started to push up, right? So if you notice, we got a big sell side imbalance right here, meaning we only offered sell side from 12 noon on the 30th, which was Friday, from 12 noon on Friday up until pretty much the end of the day. We only offered sell side. So that's a sell side imbalance, right? So you got a sell side imbalance. The market is going to want to rebalance that, right? Over here we have an order block, right? We came down, we sold down, we had a shift in sentiment. There's one up candle right here at 11 o'clock, right? And then we had a hard sell-off from this candle right here. So now that's a potential order block. We got an order block there. We got a sell side imbalance here. All of these are PD arrays. These are PD arrays for stuff that you would look for the algos to attack. The algos are going to be attacking these areas, right? So once we took out this sell side liquidity and we came here, we consolidated, and then we started coming back up. So yesterday, when we came on live, we would have been right here. We would have been right in this 9 o'clock candle right here. We would have came on live right here on this 9 o'clock candle, right? So now yesterday, as you know, I said if the bullishness continue, the bullishness is to continue, right? I would like to see the algorithms come back down to a discount, right? And attack this fair value gap. God dog it. Get out of my way. Attack this fair value gap right here, right? And this fair value gap just above it, right here, right? I said we got two fair value gaps right here that we made on this ascent up with this buy side imbalance. We only offered buy side from this consolidation, right? We left two fair value gaps, right? Then, so the market operates off discounts and premiums, right? So looking at the price leg that we're currently on, which was from, matter of fact, I'm gonna set this here and then I'm gonna move this over, right? So I'm about to make this bigger now so you can't see that. This is all you can see when we came on live. Boom. So that we, you know what I'm saying, we won't get confused, right? So why did I just delete that? So now, so looking at the price leg that we're on right now, right? We didn't have that candle. Well, we was making this candle. We was making this candle was So we was making this candle right here. This candle was being made. We hadn't finished this candle yet because we started at 9 o'clock, right? So pretend like you can't see that this came down to this fair value gap right here. So we was like, okay, the 9 o'clock candle opened up right here. And then at 9 o'clock, this 10 o'clock candle opened up here at 36.25, right? And we started pushing up. We made this high. We ran the fibs and equilibrium, right? For anybody who don't know what equilibrium is the halfway point between the lowest low and the highest high of the price leg that you're on right now. The market likes to sell at a premium, buy at a discount, right? It comes back to equilibrium, right? Equilibrium is like the middle ground, right? You know what I'm saying? It's not bullish or bearish. The market likes to come back to equilibrium to check stuff out, right? And decide if it's going to go lower or higher, right? If it wants to go higher, it's going to either come to equilibrium and take off or come into a discount, which is under equilibrium, lower than equilibrium, and take off. If the market wants to drop, it'll come to equilibrium, push back into a premium above equilibrium, and then drop down, right? Because the market like to sell in a premium, buy in a discount, right? And so as you see, I was like, I like to buy at a discount. So I was trying to enter off of this fair value gap. Why was I trying to enter off that fair value gap? Because we had a bullish move up, right? We had a break in market structure right here at this high of 36.1850, right? And right there at that high, we had a fair value gap at the break in market structure. That's my go-to trade. I call it the liquidity run reversal. It's a break in market structure, fair value gap retracement. We had a break in market structure right here. This leg, it broke market structure right here at this 36.18, whatever we said. And then it left a fair value gap here at the breaking market structure, and it had another fair value gap just below it in the discount. So when the market retraced back to this PDE array, a fair value gap, a breaking market structure, you know what I'm saying? All of these are areas of liquidity that the market is going to seek out, right? It's internal liquidity because it's inside the top of our box and the bottom of our box. It's inside the dealing range, right? So we push down to this internal liquidity. It didn't come to the discount what I wanted. I like to buy at a discount, right? I don't like buying at equilibrium, especially when it's a PD array and a discount. Because if I buy at equilibrium and the market decides to go to the discount, I got to take this heat. And this heat may be outside of my risk tolerance for this trade, right? So I like to buy in a discount, especially when we got two fair value gaps on top of each other. I'm gonna try to enter on the farthest away from the direction. If it's a bearish move, I'm trying to get at the highest fair value gap. If it's a bullish move, I'm trying to get in at the lowest fair value gap if they're right there together at the breaking structure, right? Boom. That's being said. So then we came down to the fair value gap, and as you see, we never looked back for the rest of the day, and we went up and we took out the external liquidity, right? So remember where we started at. We came in and we took out external sell side liquidity, right? Set a new bottom of a box. We took all of this external sell side liquidity. Whenever, most of the times, once you take out a significant liquidity area, a significant breaking structure to the bottom side or the upside, typically you're going to deliver that to some external liquidity on some level. You see what I'm saying? You're not going to come down and take out a monthly external liquidity level like what we did, right? We took out this monthly. This right here was the June lows, right? We took the liquidity line that we took out, right? We took out the June lows, soaked up a bunch of liquidity. See here, we got monthly counters, right? We took the June lows out. Let me get all this text off the screen so y'all can see what I'm talking about. It ain't about so much the actual text. It's about we're making it a teachable moment today. The market getting ready to open up in like 6 minutes. If you just came here to hear me call out some levels, I ain't calling out levels today. I decided to make this a teachable moment. It's spur of the moment. I jolly pies if that's all you want. But guess what? Let them know. Cool it. Let them know. Yeah, damn it. Let me get this fib out of here. I don't need the fib no more anyway. If I need it, I'll just break it back. Let them know. Cool it. If they don't like it, if they don't like what we're doing, let them know. See, we took out this external sell side liquidity down here, and we, you know what I'm saying, we made a nice run on it. We got below it pretty deep, right? And so then we came back and took out this external liquidity below this monthly low right here, right? So now that we done took out all this external sell side liquidity, right, it's highly probable for it to deliver it to some external buy side liquidity. You know what I'm saying? Either on a daily level, either on a weekly level. And as you see, we have come down and delivered it. I mean, we have went back up just looking at this monthly candle. We delivered it outside this green line was the daily dealing range that we was looking at, and this purple line or blue line, whatever color it was, that was the weekly external buy side liquidity we was looking at. So we have taken out a monthly external sell side liquidity level, and now we have come up and delivered it to a weekly external delivery level. You know what I'm saying? On that time frame. That's why and I just said all that just to say that's why yesterday, I think it was yesterday, when we were talking about I said it's most probable that the destination for this liquidity that we just ran is this weekly level up here at 31, 37, 51, 25, because we had taken out the daily external liquidity, and the market wasn't showing any signs of trying to reverse because it was just classic algo repricing to the upside. We never gave any retracement yesterday. We moving these boxes. I explained why I was looking at these right here. We never gave any retracements. We consolidated, blast off, consolidated, blast off, consolidated, blast off, consolidate. Now this is during the day. Now this is overnight, right? We blast off, consolidated, went up, consolidated, went up, consolidate. Now we're at the point now that we have hit our target, right? Because yesterday, once we took out this buy side liquidity, that last night I said the most probable, I said it's my opinion, I believe that the target for this liquidity that we took out is this weekly high up here, right, at this 37.51.25. Now that we have hit that target, now it's time to see what the algos want to do. Do they want to continue this bullishness and get up to this monthly external liquidity up here at this line here at 3801.50, right? Is that the ultimate target for this right here? Whenever you're looking at, whenever you've run liquidity on any level, you look at your dealing range, right? Our daily dealing range has been overtaken. Now our weekly dealing range has been overtaken, right? Now that our weekly dealing range has been overtaken, now what you do, you looking to see, is this buy model right here, is this buy model right here completed here, or are we just in the portion of a larger buy model from here, from this high over here at 38.33? Is this just a part of a bigger buy model that's not going to be complete until we get above this monthly level? We don't know that, right? We don't know if it's just part of a bigger buy model, right? So now that we've hit this target, now this is the time where you sit there and wait to see what the algorithm's gonna want to push for. Now that we understand what we're looking at, what we're looking for, and how it's moving, now let's talk about not getting shaken out of your thesis and when to give up, right? It's all based on the same thing. You're looking at the PD arrays, you're looking at how the algos are moving, right? So look, for example, right, we on the sell side of this buy model right here, right? Now, if you look close, right, this is the sell side of a sell model right here. This area, I'm gonna draw. If you don't want to see me draw, if you don't want to see me draw, you feel me? Y'all already know what the lick read. Y'all know I ain't got good sense. Y'all know I ain't got good sense. All right, let me share the other screen now. I sure wish I can share multiple screens. All right, let me get a screenshot real quick. Get out of the way, calendar. All right, so okay. If you notice, right, I was saying this right here, wherever I was at, like this, you see this this buy model right here, right? We got a buy model right here, right? Because we sold off, we sold down and bought it back up. That's the market maker buy model, right? Shaped like a V, right? But if you notice, right, this sell leg, this sell leg right here of the buy model that we was looking at is the sell leg of a sell model right here. It's a sell model right there. Because inside the model, it's a model and a model and a model and a model. A model and a model got a model and a bottle. So it's like different models inside the models, right? So, right, that's why I say we don't know if we're in the part of a bigger buy model or if it's just if this buy model is complete now, because we've come to a juncture, a area where now it's time to let the market show you what it's going to do. The market is open. The market is open. The market is open. If you got to go trade, I appreciate you for hanging out with your boy. Hit the like button on the way out the door and trade safe. See you tonight at 7:30. Hey, so and looking at how the sell models and the buy models work, right? So peep this here, right here. Come on, Tim. Right there, that it's an order block in that area right there. See that little green candle right there? When I'm moving the mouse, it's an order block in that area right there, right? So the market come down, hits that order block, and sells back off, right? Now, peep what happens when it comes back to that order block right there, right? The market comes back up, and then that order block there becomes a buying opportunity. Now, let me explain how this was a triple A setup, right? This was a triple A setup right here to go long because if you knew what was going on in this area right here, we had an order block right there, a breaker right there, and then the buy side of the buy model coming back to an order block on the sell side of the buy model and coming to a breaker in the exact same spot. A breaker in the exact same spot. So that right there. And then if I ain't mistaken, no, it wasn't. I thought it was a fair value gap there, but it wasn't. But there's a break and there's an order block right here. So you got a bearish super A plus setup, right? You got a bearish order block right here, right? You got a breaker, you got a bullish, you got a bullish breaker right here, and then you got a bullish order block right here, right? So triple A plus setup and a breaking market structure right there. We broke market structure right there, right? So we got on the sell side of this buy model that's not up here yet, you're just coming back up. You got the sell side bearish order block, right? Typically, when you come back to a bearish order block on the buy side of the buy model, that's typically a good entry point to go long. Once you push through it and market trace back to that order block, that's typically a good time to go long. But when you pair it with this breaker, once you pair it with this breaker right here and you pair it with this order block right here, along with the breaking structure, triple A plus setup. That's how you cannot get spooked at this time. Once we break through and come back down, this order block, this breaker, and this breaking structure is the reason why I said it's most probable that we're coming to at least here. because we had an order block here, we had a breaker here, and we we were setting a order block here at the end of the day. When we got back on the live, we were prepared. It was likely to become an order block right here, because the order block wasn't an order block yet, because we hadn't traded away from it. So, but I was anticipating it becoming an order block based off of the fact that it was right in line with the bearish order block on the opposite side of the model, and it was right there at a breaker, and it was right there at a breaking structure. So that's how you don't get spooked out of your thesis when the market starts to go the opposite way. You start to look for PD arrays that the market may be going to attack to move, right? And when you got a fair value gap down here, right, it's not likely that we're going to come down to this fair value gap when you're right in line with an order block on the opposite side of the model and a breaker at a breaking market structure. It's highly unlikely that you're going to break this order block, break this breaker, just to come to a fair value gap, right? The fair value gap is a price imbalance, but the order block and the breaker and they're like, imagine when the price is just say the price walking through a maze. The order block, the breaker, those are breadcrumbs. The swing highs, you know what I'm saying? The breaking market structure, the order block, the breaker, the market is dropping breadcrumbs, so it know where it need to go back to. It's dropping breadcrumbs, right? And then once it soak up all the breadcrumbs, then it'll go back and start worrying about the imbalances and stuff. So if you haven't broke through this right here, it's not as probable that you're going to bust through this to come to this order block. You know what I'm saying? It's a higher probable trade to take the buy off of the breaker, to take the buy off of the retrace back to the order block on the opposite side, lined up with an order block on the side you're on now. It's a higher probable trade to take it here. Then once you trade off of this, if it starts to come back again, then you can direct your attention to, hey, what PD array is trying to get to below this level. You know what I'm saying? But the first time it comes to these levels, you know what I'm saying, it's like trust the process. Boom. If it's wrong, it's wrong. It ain't got to stop right there, but that's why you got risk management, right? And now that we have taken out this weekly level that we was looking at, now it's time for the algos to show you, okay, is the monthly level the ultimate target? Are we going here? And how are we going to let the algo show us that? That's when we start looking at the different PD arrays that we've been leaving, the breadcrumbs we have been dropping. We've come above this consolidation, and we've broken this high. And let's see where we are right now. I'm done drawing. Now I'm going to go back to the other screen. I'm going to go back to the other screen now. I'm finished drawing. I appreciate y'all for putting up with my drawing. I know it's so beautiful. I know it looks so good. I could win awards with that artwork. Boom. Add to the screen. Okay, let's see where we at. Oh, we pushing. We push. It's got my hourly candles moving, right? So you start looking for PD arrays. Y'all know I'm live on my futures trading right now. And I'm not trading right now. I really hope y'all appreciate this. So now we've had a major breaking structure right here, right? So we got a major breaking structure here. We got an order block on this side right here that we're pushing past, right? So we got an order block over here, an hourly order block on this side of. I'm just gonna go with the body of the order block. You can go with the body, you can go with the wick, you can include everything, right? So this is the entire order block right there. That's the entire order block from top to bottom, right? That's the entire order block on the sell side of this bigger buy model, right? Remember when I was like, we don't know if we're a part of a bigger buy model or if this smaller buy model was finished, right? So now we got an order block on the sell side of this bigger buy model, right? So that's one PD array you'll be watching. If we push past this order block, right, you'll be looking for price to revisit it on it. Like you see this candle right here, this down close red candle right here, right? The way we're pushing away from this is setting this up to be a potential order block, right? We're leaving this consolidation. We're setting this up to be a potential order block, right? So we got this potential order block, which is roughly in line with this potential order block on the opposite side of the model, right? So once we trade up past this and the market starts to come back, this would be an area I would be looking at like, hey, this looked like a good area to maybe go long because it's at a breaking structure, right? We got an order block. We got a bullish, or we're forming a bullish order block here, and it's pretty much in line with a bearish order block on the opposite side of the model. So that'll be a highly probable area to maybe keep going long up here. Or if you haven't gone long already and you're in a long, this would be a point where you, hey, I'm not going to get scared. You know what I'm saying? This is like going to act as some kind of support with me. And if you're thinking about trailing your stop and you'd be like, okay, I don't want to give up too much. If my stop is still down here below this order block down here, below these equal lows down here, I don't want to give up that much profit because we came this far overnight, right? This would be a good area to trail your stop up under this this swing low right here at 37, 34, 75. Or if you want to get it super tight, put it right up under the bottom of the order block, right? Because you're anticipating price to not go past this order block. If it goes past that order block and it stops you out, that's what risk management is for. If you take the entry at this order block and it go past this order block and stop you out, that's what risk management is for. But that's how you don't get shook out of your thesis, by looking at what PD arrays will the market attack. What are the algos using right now? The algos are that they showed us. Remember I said down here, I said we look like we're starting a buy model, right? When we were way down here, we look like we starting a buy model, right? This over here at the 9 o'clock candle, right? I said, look like we're starting a buy model, and we started a buy model. I said, if this bullishness continues with this buy model, right, we should take out this external sell side liquidity. Buy side liquidity. I said, we got us a order block there, right? We got an order block. Let's see if we go to this order block and go back down, or if we go to this external liquidity. We went to the order block, sold past it, came back down. Boom. It was an opportunity to go long, right? We took out the external liquidity, right? It's at the opposite side of an order block at a breaker. We went up past it, hit the breaker, hit the order block, hit the breaking market structure, took off again. Now we've taken out another breaking market structure, and we're setting a potential order block across from another order block. So if we sell past this, it would be within reason to take a long off of this order block. But if it slide through and stop you out, guess what? That's what risk management is for. You know what I'm saying? This may have been the destination for the algos, and they want to turn around now. If it stopped you out here, you know what I'm saying, and then it start coming down, and these, like if it stopped you out here on this order block, that's when you sit and chill and wait to see what it does. If it comes down and breaks through this order block right here, excuse me, that's when you look to go short off of this order block. You see what I'm saying? Because now you're coming down and you're starting to break structure to the downside, and now this order block is failing. This order block is not pushing it back up, it's failing. So now you look to go short off this order block down. But the way we pushing, it really don't look like it really looks like this monthly level up here at 3801.5 is the target for this sell side liquidity that we took out. We've taken out the daily, we've taken out the weekly, and now it looked like it wants to deliver it to this monthly level. Will it take it all the way up there? I don't know. It can come right here to this swing high right here, throw on brakes and turn around. You know what I'm saying? It don't have to take it out. It can come up here, get above this buy side liquidity above 37.8375, get above that buy side liquidity and take off to the other side. Because look how it reacted the last time it came to that area. It came up into this order block right here and wicked down heavy. You know what I'm saying? It came up, hit that order block, hit that fair value gap and wicked off it and sold off mammy. You know what I'm saying? It can come up there, back up to the wick of that order block and kiss that level and sell off. It can do anything, but I just want to try to make it a teachable moment on how little Timmy Rogers look at the price action. My curtain, the fan got my curtain moving. I want to give you a peek into how little Timmy Rogers look at the price action and how to look at the PD arrays and try to and anticipate the most probable moves of the algorithm, right? And the best thing in the world is to be in accordance with the algorithm. Remember yesterday when I was saying, okay, this is the first trading day of the month. You look back the 20 days and be like, okay, what's the highest high, the highest low in them 20 days? If the market start pushing bullish in them 20 days, this is the highest probable high that it's going to take out. And you just scale it out. This high, boom, we took it out. This high, boom, we took it out. And you keep looking. Once you get to the highest high in them 20 days, then you look back the 40 days. Okay, this the highest high or the lowest low. Will the algos keep pushing toward that one, right? And then if it overtake that 40-day high or that 40-day low, then you look 60 days back. This the highest high, the highest low. That's how you stay in tune with the price range that the algorithm working with. And then I break mine down into daily ranges so that if the daily range give to the upside or the downside, if the daily range give to the upside, then I'd be like, okay, boom. That's why I just moved the top of the box. Or if it give to the bottom side, I just moved the bottom of the box. Y'all done seen us do it. Y'all seen me go through it. Now I'm trying to explain the why of why I just was moving the bottom of the box. And once we get so far down, I moved the entire box down because it's like, I don't want a huge box. I want to stay in tune with what the algo's doing right now. Once we get so far down or so far up, I move the entire box. Okay, boom. This the dealing range we dealing with. And so hopefully that helps somebody, man. I really hope that helps somebody. I'm gonna go over here to the chat to see. Oh, y'all quiet in the chat. Y'all was just listening today. I don't see nothing going on in the chat. Bandu. What's up, Bandu? How is the middle a bullish breaker? I ain't gonna hold you. I don't know if it's bullish or bearish, but I just call it I call it bullish. I call this right here bullish. I don't know if it's bullish or bearish. Don't quote me on that, but I call it bullish because I'm using it for a bullish move. I don't know how to name. I know how to name the order blocks, but I'm using it for a bullish move. But it's a breaker. I'm glad you asked that question. Every breaking market structure won't have a breaker there, but every breaker is going to be found at a breaking market structure, if that makes sense, right? So let me explain what I'm saying. This right here is a breaker because this high broke these lows down here. See, it came up, it broke those lows, and once it broke those lows and got traded back through, that made this a breaker. You see what I'm saying? We came down, we made a low, right? Made a high, we made a lower low. This high broke this low. So you made a low, a high, a lower low, and then once we traded back through it, now that qualifies as a breaker because that high broke those lows. You see what I'm saying? And then we traded back through them. So now that's a breaker, right? And now I called it a bullish breaker because I'm using it for a bullish entry. I don't know if that's right. Don't quote me on that. But when it comes to the order blocks, right, this right here is you come up and you come down. So this green candle right here form, or this green candle, which if you like to use the beefier candle, it don't matter. If you like to use the last candle, it's up to you when it's in a consolidation like this. But this green candle, right, it's a shift in sentiment, right? So now it's forming a bearish order block, right? Because when you come back to it, you take a bearish entry off of it. You see what I'm saying? It's like It's a green candle, but it's a bear because you're taking a bearish entry off of you coming back to it. Boom. It's going. Oh, y'all, did y'all do it? It's an order. It blocked the price, you know what I'm saying, from going higher. It's blocking the price from going higher and forcing it bearish. You see what I'm saying? So you got a bearish order block, right? And then when you come on this side over here, right, this down close candle is a shift in sentiment, right, forming a bullish order block. It's like, you know what I'm saying, because when you come back to it, you got a bullish move off of it. So you got a bullish order block, a bearish order block, right? So when I came up here and I got this breaker, I just called it a bullish breaker because I'm trying to take a bullish move off of it. I don't know if it's bullish or bearish, to tell you the truth, but I'm taking a bullish move off of it. So that's why I called it a bullish breaker. But what makes it a breaker is that you set a low, right? Came up, made a high. This high broke this low. And when you trade back through that, that makes this a breaker. When you trade back through it, now it's a breaker because it broke this low down here, right? If it doesn't break this low down here and it trades back through it, it's not a breaker. It's a failure swing or a mitigation block, right? Either you know what I'm saying? Like if we came down and set this low, pushed back up here and came down and didn't break this low, and we came back and had a breaking market structure, like just like we did here. Let's just say I'm move the thing down like this. Let's just say the lowest, this was the low of this swing right here, and we started going back up and broke structure there. Now this wouldn't be a breaker. That would be, you would either classify this as a failure swing, and this would become a mitigation block where, you know what I'm saying, they're mitigating their losses from going short way back over here. Like they went short over here and then they got trapped. And then when they came down, they was hoping they was going to get out, but they didn't get out. And so they just mitigating their losses over here and it's going back up. This could be like how we came down here and pushed back up, you know what I'm saying, how we bounced back off of this right here. This was kind of like a fake mitigation block right there that probably trapped some people who was super bearish and wanted to go short, you know what I'm saying? But that's what make that a breaker. Hopefully I didn't confuse nobody. Hopefully I was able to clarify that. You and your bag this I just decided to make it a teachable moment today, man, instead of just talking about the price action. Tim, you take the time to explain the graph. I appreciate it. I appreciate you, Audrey. I appreciate you. Appreciate you. Thank you for the gems and the whatever that is here to learn and share. The spark. I'm glad it helps. Whatever I helped with, I'm glad it helps. Appreciate that, Audrey. The silence means you are teaching up a storm. The silence before the storm. Okay, then. The silence in the storm, I guess it'll be. Michelle Tucker. I appreciate that, Michelle. All right, Bandu, appreciate you. Hey, man, I done said a whole lot. I'm thirsty. I ain't want to be drinking while I was talking. It's always one hater. It's always one hater. Y'all know what? Everybody take back all them prayers that we prayed for Cooley, that he'll be safe in the storm. Take them back. I'll take them all back. Dear little baby Jesus, can we have our prayers back that we sent up for Cooley? Hey, man, I appreciate y'all for pulling up, man. I'm about to get off of here. I'm starting to feel hoarse because I ain't drunk no water. I'm going to go ahead and watch the market. It's almost 10 o'clock. I'm gonna try to see if I can get something. I ain't gonna try to force nothing. I just wanted to make it a teachable moment. For everybody who interested, I marked out these divergence lines over here on our divergence chart that we like to look at. From the high, our weekly high that we was watching, right? The YM broke that this morning on the 7 o'clock candle. The ES broke it pretty much on the same time frame, and then the NQ still has not broken it yet. So if divergence is going to play out like it typically plays out when all three indices typically run the same highs and the same lows, it looked like we still got a little bit of upside for today. We still got a little bit of upside for today because, like I say, the NQ, the NASDAQ, has not run that same high yet, and the Dow and the ES are well above it. They're well above it. Based off of, of this hour right now, the Dow and the ES are well above it. I ain't gonna hold y'all. If I wouldn't have got up this morning and took a trade this morning at like 5:30, 6 o'clock, I wouldn't have been on here this long with y'all. I ain't gonna hold you. I love y'all to death, but I wasn't gonna be missing this money. You feel me? Hey, but as you see, the NQ is getting real close to taking those highs, and if it's highly probable today that the divergence is going to rectify itself, and the NQ is going to take this high also. So looking at the price action, there seems to be still more upside either this morning or throughout the day. It still seems to be because the NQ has not run those highs, and the Dow and the ES has. If that's of any consolation to anybody, get off my live, cool it. Now remember, once we take out key levels, right? Y'all already know how I feel. On a bearish week, I like to go up and get the liquidity to go down. I like to do it the first beginning of the week, Monday and Tuesday, preferably, right? So if Tuesday stays bullish, or if Tuesday hit a key level for the NASDAQ, because it already hit a key level for the Dow and the ES, right? And look at that, we're stone's throw away from the monthly level. So if we take out this monthly level, don't get greedy. Don't get greedy. You feel me? Don't get greedy, because we can take out that monthly level and we can die all off in this one day. We ain't got to wait till tomorrow to do it. Don't get greedy. That's all I got, man. That's all. If I go, I'm telling y'all now, if I go through these charts and I see my setup that I could have taken on these futures, Tim's Tidbit might be over. I'm just playing with y'all, man. I appreciate y'all. Hey, I'll see y'all tonight at 7:30. Hopefully, I was able to explain something. If you don't know, I'm going to start doing pre-recorded videos to break down just different aspects of what I do. Just different aspects of what I do based off the stuff that I learned from ICT. I'm gonna start the full series. I don't know if I'm gonna still call it Discipline Over Dollars. I don't know what I might call it Discipline Over Dollars, but I'm gonna break down everything. I'm gonna start from the beginning, from people who don't know nothing about the stock market, and I'm gonna go all the way through. If you want to be a day trader, swing trader, if you want to be an investor, I'm gonna go through everything. So I'm gonna break it down just like I did Discipline Over Dollars, but I'm gonna have it in small chunk size videos, so you can be like, okay, I got this part. I just want to learn how to read price action. Then you'll look at these series of videos. I got this part, but I just want to look at strat. I understand the price action, but I want to learn about strategies. Then you look at these videos. You'll be like, I don't know nothing. I don't even know what a candlestick is. You'll look at these videos. You know what I'm saying? I'm gonna break it down in little chunks, and this thing's still pushing, and I'm getting FOMO. So I'm about to walk in the living room or something. Appreciate y'all, man. I'll see y'all tonight at 7:30 for the price action recap. If you're gonna trade safe, man. Appreciate y'all. I'm gone.